I'm now going to show you taking profit, so targeting, where you need to target, at what zone for each pair in each session, and also going break even. So by going break even, what that means is that you're putting your stop loss to your entry point. So you're now risk free, you can't lose any money. This is how to manage your trade. That is what going break even is. It's just trade management. It's very important. And I'm going to show you exactly at which levels to do each one. So targeting, aka your take profit is where your trade is completely taken out in a profit. So targeting and break even, they tie perfectly into one another. You do it at the same zones, they work perfectly correlated, as I'm going to show you right now. So firstly, this example on Euro JPY, this is for London session and buying. So this is targeting and going break even. So if I take it back to the start, the trade example, it's literally just a buy off of the previous London low and the London high from the couple of days before. So it's a very normal trade, pretty standard, exactly what we'd look for. Now the 15-minute, if I just show you, we get an entry from this candle here. Now this isn't about entries or stops or anything, so I'm just going to throw it down there. Now in terms of targeting, what you need to do is find out what are the zones above. So what are the zones we're going to come into? So on the 1 hour, what zones do we have? Well, we have Asia high there. That is a zone that we could push into. We also have the previous day's London high up there. Now, is there any more zones we need to be aware of? No, this is all we need. So the first step to targeting, you have to do this before you get in the trade, is drawing on the zones above. So this is obviously just when you're buying, drawing on the zones above that we could be coming into contact. Well, you're hoping we come into contact with because you are buying. So if I go back onto the 15, we now have to plan, once we're in the trade, we have to plan where we're going to be going, break even, and where we're going to take profit. So it's as simple as deciding which zone to do it at. So what you need to do, if I just go on to this chart here, the risk to reward ratio, it says on the tool here. So the risk to reward of targeting Asia high would be a 1 to 3.9. The risk to reward of targeting London high would be a risk to reward of 1 to 4.85. So at this point, it is your choice what you want to target. So I'm not going to tell you which to target. It's just whatever risk to reward that you want. So this could depend on how many on a winning streak you are, if you're on a losing streak, whether you want to secure the profits and get about your day or whatever. It's up to you which zone you target. But what's not up to you is that what you have to do every time without fail is that if you're targeting the next zone and you're trying to buy through one of these lower time frame zones, you have to go break even at this zone right here. You cannot be holding a trade through one of these zones without being break even, because there is a chance, even though we are bullish on the higher time frames, there is a chance this zone could be rejected and it comes all the way back down. So if you don't go break even at one of your zones, then it's bad trading. So in its simplest form, targeting and going break even is just whatever zones are next. What zones are we going to push through whilst you're in your trade? And if you're not taking profits at them zones, you're going break even. That's the only thing you're possibly doing at them zones. So in this case, I would actually take the profits at this Asian high because it's a nice risk reward. 1 to 3.93 risk reward is good. Anything over, a 1 to 1.5 risk reward is perfectly fine. But what I will say, you should never take profits at less than a 1-to-1 risk reward. Otherwise, the probability in the long term is just not with you. So it has to be over a 1-to-1 risk reward. When it gets above that, it's pretty much up to you. But the ideal risk reward is a 1 to 3 pretty much. But I don't have a set rule on it. It's just at the zones, because the zones are the chances of rejection. This is where we get chances. So in this case, there was 2 zones above, and you're either targeting one of these. I'm going to target this one, but let's just say we targeted the London high up there. So I'm going to play out what the trade does. It pushes up, pushes up, pushes up, and then it's tapped into Asia high. So you would have been 100%, you had to be break even at that point once it had been tapped into. And from this point, price does end up rejecting it and dropping down a bit. But in the end, it does fly through and hit the take profit. So that is how you take profits. And go break even as an example. I'm going to show you another example for London session, how you can understand it a bit more. For this next London example, it's a sell. So the idea is just a bounce off of an Asia high. And if I just show you the exact rejection candle, it was this one in here. You'll stop just above the zone. Now, in terms of targeting and going break even, what zones do we have to the downside that we're going to be pushing through? First of all, we have Asia low down there. So I'll draw that across. The next zone down from that would be the previous day's London low right there. We have these two zones on, and it's really simple what you do. Firstly, would you take profits at Asia low? It's a 1 to 2 risk reward, possibly, but say you would want more because that's only a 30 pip move. You can get more than 30 pips in one session. You would target literally just the next zone down. So all you're bothered about is the lower time frame zones that I've taught you in the session zones for each session. So you're literally just trading zone to zone. That's all this session, this strategy is: zone to zone to zone to zone. And so in this trade here, you would have targeted the Asia low to get a nice 1 to 3.29 risk reward. But that's not everything you do to manage this trade. So firstly, once price tapped into this Asia low here, you had to have been break even. You had to have. It's part of the rules, because price could have just rejected Asia low because it's one of our session zones. It could have just rejected it and then pushed all the way back to the upside, because this is a session zone on the lower time frames. So holding through it means you had to have been break even. You had to have been risk free, because it is risky to hold through zones. But the bias was with the bearish momentum, so you could have targeted down at the next London zone, which was just the previous day's London low. So targeting and going break even, it's really simple. It's just whatever zones you're going to be pushing through in the trade, you're either going break even or you're taking profit. Just make sure you're never taking profit at less than a 1-to-1, and make sure you are always going break even whenever you tap into a lower time frame zone. But another key point is never go break even before 20 pips. If you go break even before 20 pips in profit, I mean by this, so it's say you're 17 pips in profit and you've tapped into a zone and you go break even, it's not worth it because you're not giving your trade enough time to breathe. So if I just draw it out right here, say you went break even at 20 pips up around there, then it could just come back up very easily, because 20 pips is not a lot. It could just come up, stop you out, then come all the way back down. So it's got to be over 20 pips in profit before you go break even. So there's kind of two rules that I've labeled off here: never go less than 1-to-1 risk to reward, and never go break even before 20 pips, or otherwise you're not giving your trade enough time to breathe. So it's so simple. Lower time frame zones, you have to know your session zones. If you're not securing profits, you're going break even. Simple as that. Don't need to make it any more complicated. We're just trading zone to zone.